On some occasions we have low energy shows where someone complains that they're tired. Not today. We are bringing the energy with Jeremy Newsome. He'll be joining us for the first half hour of the show, covering Netflix, American Express, Proctor Gamble, CVS. Where you at, Mr. Activist? Ivan Feinseth at 8:35 be joining us, give us his bullish outlook on the markets. It's a Friday. There's no other place you want to be than pre-market prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, starting out in the green, 12 and a quarter handles, 58.99 and a quarter. All-time closing price from 2 days ago at 8 and a quarter. That'd be our bogey for the day. The buck is down slightly, down 19 cents, 103.47. Big rally over in the month of October. TLT coming back down towards the low of the moves, down 34 cents at 93.46. Crude hanging right at $70, having a bad week, but down 60 cents today at 70.01. Gold is shining, up 18.20 at 27.25.70, new all-time high. Silver back in the 32 handle. That's up 50 cents at 32.28. Bitcoin futures working their way towards 70K. They're up $980, 67,865. I'm going to stop the screen share and I'm going to bring on Jeremy Alexander Newsome, a longtime contributor to the show. Jeremy, how you doing today?
My dude, the family. So excited, so thrilled, so honored. Appreciate you, Joel, for this exciting, man. I'm thrilled.
All right, out on the West Coast here. So Jeremy is joining here at 5:03. He made the move out of there, out of Nashville. Before we get going, I have a couple questions for you. I want to introduce you to AB, Aaron Bree. And you know what? He's a survivor. Come on, AB. There's been Brianna, and there's been Joe Young, and there's been Spencer, and there's been Money Mitch. And now I'm bringing you AB, the best of them all. How you doing, Aaron?
I am good. Happy Friday, everyone. We had some should we do a quick sports talk? I mean, crazy baseball games last night. Did you see the ending of that Guardians game, Joel?
Yes, I did. And
I got to shout out Jeremy here real quick because, Jeremy doesn't know this. Joel knows that Fridays, sometimes can be a little tough for me to be in the office on time, but now I'm inspired because I'm like 7:30 in the morning. That's late compared to what Jeremy's doing over here. He's getting up at what time your alarm go off? 4:30 to get up this morning, Jeremy?
Yeah, dude. 4:23 technically.
4:23. So guys, smash the like already for Jeremy, who's joining us super early. So
before we get started, I have a couple things for Jeremy. One, you have a number where you're going all the cash. Is that number in the SPY? What is that number, Jeremy?
Joel.
What number is that?
I love it, buddy. It is 50505 on the Qs.
Oh, the Qs.
Triple Qs. Okay. Yep.
Why?
Well,
why that number?
So believe it or not, I actually did get fortunate enough. I sold all in July at 500 on the Qs. Just because I felt like it was so flipping high. We didn't have any pullback, and 500 is a really easy number to do calculations. And you know me, Joel, I use a calculator for everything. So I said 500, I'll just get out there. And really 50505 is pretty much just the same thing. I'm just looking for a little bit of a push higher. But also because the election, I mean, it apparently is coming around the corner. I do believe there will be some volatility. We also are very, very high on the SPY. We're very high on the Qs. We're very high on the Dow Jones. I feel like a pullback would be reasonable. So I'm going to be all in cash, my bro.
That's everything, like everything. Like long-term, short-term, like everything. Your Bitcoin. What about your Bitcoin?
Even Tesla. I want to even have Tesla shares. if the Qs hits 505.05. So yeah, I'll just be in cash just because I feel like worst case scenario, I'd get another 7% pullback on most stocks if the market had even the slightest dip, and I could just get back in and redeploy and lock in some gains. So I'm not really gonna be afraid.
And that's that's just 505.05. You don't care who wins, who loses. That's your number.
Well, we got to hit that before the election. Yeah, we got to hit that before the election. If we don't hit it before the election, then I'll start increasing it. It'll probably be 5. It'll probably be all 5s, 555, 55 after the election.
And also, and then one more thing, we'll move on to stocks here. Did I see you're thinking of getting into politics, Jeremy?
I'm thinking about it, man. I feel like there are a lot of broken systems out there, and I truly don't believe there's a lot of really nice individuals who are trying to shake up the system, just like I did with the stock market and the Wall Street industry. I feel like there's a good breath of fresh air that's needed in politics as well.
All right. Well, I couldn't echo those sentiments more. So you got at least one vote here.
Thanks,
All right. All right. All right. All right, we'll let this is where we let AB take over.
Aaron.
Yeah, so let's, I mean, you know, when we don't know where to start, we can just go straight to whatever the biggest company was that reported, or the by market cap, the company with the biggest news. And that's this morning is Netflix. So Netflix, of course, reported earnings after the close yesterday, and the stock sold off a little bit, down 2% heading into the report. So maybe some people were skeptical about the report or taking some profits beforehand, but Netflix just blew it out of the water. EPS of $5.40 beat the $5.12 estimate. Sales came in at $9.82 billion, beat the $9.76 billion. So better than expected Q3 financial results, 14.4% growth in global streaming paid memberships. The guidance was pretty strong as well here. So Netflix ended up popping on the reports, trading up 6.5% or $45 this morning. And Joel, where are we at? We were getting all-time highs, close right there.
Oh yeah, we're right. You know what? We'll let Jeremy throw in here comments, and I'll give my fundamental and technical take on Netflix.
So Netflix, I've always been a fan of Netflix because it falls into my category of, if you own it, right, you should own it if you use it. And this is one of those. It's better to be an owner than just a consumer. Everyone has a Netflix account. Everyone can buy 5 shares in Netflix, right? You can own those 5 shares for a period of time until you make money. This gap is a really, really strong gap. Very, very strong. I call this one a gap and go, because you had tons of bear candles on the daily chart that we are gapping above. So we're opening up 6.5%. Great gap on Netflix, but we are gapping into all-time highs. My take, we probably spike into the 740 region, and then we eventually end up pulling back into 715, 710, best case scenario. And then we end up going higher. Worst case scenario for the bulls, but again, we make it to 740, pull all the way back to fill the gap to 680 early November. And then we ultimately go higher. Again, I'm not saying that this is a negative outlook at all on Netflix. This is a very, very, very good gap. We do go higher from this gap. The question is just simply, how long will it take?
I don't know what to do. You pay attention to the expected move at all? Because I don't have that platform open. I think it's over the expected move.
Mm-hmm.
I think, I'll just kind of echo, your sentiments here. I can't buy it up here. Maybe
Right.
I should. I think you had a lot of people that like, wow, if Netflix gets back to 715, 720, I'm going to be so happy after
Mhm.
seeing a 1, 2, 3, 4-day losing streak. So, I think you're going to see some resistance here. The only numbers you have are the all-time high at 736 even, and then the all-time closing high at 730.29. So those are the two numbers that matter to me. We haven't got to that 736 yet. And just to draw through parallels here, when big-time stocks hit all-time highs, sometimes, they take them out by a little bit. NVIDIA, that made a new all-time high yesterday by a couple ticks. That pulled back also, and we'll get to this stock later on. Do you see sneaky old Apple going up on Tuesday and making a new all-time high? So those are good levels to play right now. playing them as resistance. And Jay says the move was 50 in the Netflix. So there you go. We'll see how that price action turns
Yeah,
out.
Netflix historically has been kind of a crazy mover on earnings. If you remember, about 2.5 years ago, it was the April report in 2022, I believe, or 2021 maybe, where Netflix just went down like 25-30% after earnings. And if you go back to Netflix's chart, Joel, you can see, I mean, this was probably the stock that got crushed the most in that tech downturn in 2022. I want to say the drawdown was over 80%. And it was kind of like the like laughing stock of the tech world of people were talking about how big of a disaster Netflix was, because for multiple quarters in a row, the stock traded down more than 20% after the report. And anyone who bought down there, I mean, around $200, I think it got down to around 180, has just been rewarded for 2 years straight here. So, I mean, Netflix, Meta, if you look at Meta's chart, similar too. So, it's good to have these reminders that, like, hey, sometimes when these stocks go down 80%, if you're talking about the big boys like Netflix, Meta, etc., like they come back. A lot of the smaller stocks, when they go down 80-90%, you better forget about it. Those things are on their way to zero.
You know what? There's a sappy show that Lisa. I can't remember.
Joel, it's okay. It's okay. If
It's
you
a
like
sappy
it,
show.
no,
It's a
your
sappy show that Lisa likes, and I've been waiting for the next season to come out. And there's some murders, there's some people getting beat up. It's not too bad. Do you know what show I'm talking about? It was really popular, and
Netflix.
yeah, on Netflix. It's coming out for his 6th season on
Oh,
December
man.
19th.
6th season, Peaky Blinders.
No, I never heard of that. Virgin River.
Virgin River. No,
No one's heard of that show, Joel. Not a single. You're the only person that watches that.
Okay. Oh, really? I bet you some other people have. All right, Jeremy, there's one. Okay.
Yep.
We have the over-under and how many times Jeremy laughs during the show. But okay. All right. Move us on.
All right, so we've got some other earnings stocks. We'll just rip through these real quick. None as big as Netflix. But let's go to Procter and Gamble real quick. We'll warm up, and then we'll get to a couple other ones as well. So Procter and Gamble reported this morning. EPS came in at $1.93, beat the $1.90 estimate. Sales came in at $21.7 billion, missed the $21.9 billion estimate there. Let's see. They reiterate their fiscal year 2025 outlook, adjusted EPS 691 to 705 versus the 697 estimates. That comes in kind of in line. But I mean, Procter and Gamble, it's a boring stock. The move here is boring as well, down $2, 1.1% here. So I don't know what I can't imagine the expected move, Jay, was too much here in Procter and Gamble, but I'm going to assume that $2 was probably below it, but maybe the expected move was like $3 or $4. But again, boring stock, boring move off the earnings report. I'm not sure how much we want to talk about Procter and Gamble here.
Just quick technical comments on this. This is an absolute no man's land. Multiple high formations over 174. That doesn't do you any good. And really, I don't have any multiple lows in this same area to give you, any kind of confidence. We did spike down to 167.40. Man, if you're selling Procter and Gamble down $5, you're probably not doing things right. So let's see. The only thing I can give you right now is that you've been in the hole. I will call that closing price from yesterday good resistance. People looking at the mark here, 172.28. Your previous day's mark, 172.38. So that's what I'm looking at. PG, any comments out of you, Jeremy, on this? Is probably too boring of a stock for you.
Well, what's cool is this will actually probably be a really good day trade. This looks like one that I would short actually around 170, 150 with a stop at 172.50 for it to trade back down to 169. Ultimately, that could happen today relatively easily, actually. So I really like the gap from a day trade perspective. If you're just looking at capturing $1 or $2 on your Friday. Jim Cramer posted an interesting thing about Procter & Gamble. He said, confused by why traders are flocking to Procter & Gamble this morning. I'm concerned about a real slowdown, which was confusing to me because Procter & Gamble is down. And if he says the economy is slowing down, then that means we're about to go through the most fierce bull run of in history. But yeah, it is. I do like boring companies just to buy them longer term and hold them. If I was going to buy Procter and Gamble on a big long-term move, I'd probably, with this gap down, sell some 165 November puts, because that's the 200 simple moving average on the daily chart, and just sit back, relax, and enjoy. If Procter and Gamble got down there, own some shares and let it ride higher.
All righty, let's keep the earnings train ticking here. Let's go to a stock that's actually, I mean, as far as market cap goes, might be the biggest stock that doesn't get any coverage on pre-market prep. And that is Intuitive Surgical, ticker ISRG. It's a $160 billion market cap. Oh wait, did I mess up the ticker, Joel? ISRG?
No,
I got it.
ISRG reported earnings last night. Came in at $1.84 EPS, beat the $1.63 estimate. Sales came in at $2.04 billion, beat the $2 billion flat estimate there. So you're seeing Intuitive Surgical up about 6% here on that. You had some analysts come in. Let's see. Oppenheimer gets a hold, gets a buy from Stifel Nicholas. Either way, Intuitive Surgical trading higher here off this report. Let me check where we're at in terms of the chart. Well, I'll let Joel give it, but I think
I got it up there. Got it.
I was gonna say, I think we're right here at all-time highs. Right around there.
Yeah, above all-time highs. Boy, $500 stock, always a little harder to trade here. Got up to 516.97. You've leaked off that. Been a long consolidation. So if you want to say bigger the base, more the space here, you got a lot of space. I think if I was looking at this stock, wouldn't try and really short it anywhere, but if it could come back into this area, if you were shorting it today, if it came back into this 496 area, look at all those daily that turned into monthly tops. So I'd call that a support. But as far as resistance, this stock is in no man's land.
All right. Well, let's keep it moving here. We do have CVS, another earnings stock here. So CVS reported this morning, and so before the numbers even came out, CVS's Q3 results won't meet Wall Street's expectations, plans to back away from current 2024 guidance. That was the Wall Street Journal headline. So anytime you have that headline coming out before you even report, probably not a great thing. So CVS Health provides preliminary guidance for Q3, adjusted EPS of $1.05 to $1.10 versus the $1.70 estimate. So then they announced a new CEO. CVS appointed longtime executive David Joyner as its new president and CEO, replacing Karen Lynch amid the company's ongoing financial struggles. We know we have some activist investors in here as well. And this stock's just been a disaster, down another 10%, 11% really this morning after this report. So CVS, I mean, talk about dumpster diving. I don't know if I'm willing to come in here and touch this right now.
Jeremy, what do you think about activist investors? Is that something that you follow?
No, that's not a specialty of mine, Joel.
Okay.
Yeah, but I agree with Aaron. This is a tough one, man. This looks a lot like Walgreens, which never caught a bid. The only thing I can see on CVS, and this is a tough one to find, it's a 200 simple moving average on the monthly chart if you adjust a chart for dividends, and it's at 54.39. So if you're going to be buying any CVS, like your best hope is probably you buy at 54, but get out if it closes below 52. Like there's just really nothing holding it up at this particular stage other than that really, really clean level around 50. And it does look a lot like Walgreens to me. Walgreens is getting beat up. CVS is getting beat up. And when you're looking at these charts, they're going to have a really, really hard time just staying afloat. I don't know if that's a retail big box play, Amazon, Uber Eats. I think it probably is, truthfully, but I'm not going to be buying it here. Yeah. I mean, maybe day trading, but I wouldn't be owning the stock.
Okay, I'll give you a couple different narratives in this. Number one, wow, what a really nice gap fill here. Look at that, all the way back to end of April. So I hope if we were talking about it, I talked to you about that resistance at the $68 level. What I see taking place in this stock today is that I think the activist is still out there, or I don't think they're going to throw in the towel. So I think the activist is going to be out there saying, all right, I still think I could change this company. This is giving me an 11% haircut. I'm added to my position today. That is just not investment advice. That's just pure speculation on my point.
Mhm.
Also, you're seeing the stock down $7 here, trading nearly 3 million shares. How about all the people that were shorting this thing at 62, 63, getting blinds? I think the activist move was actually on November 20 or September 29th. So you got the activist move there. You had the little pause, and people are thinking, okay, whatever, this is going to fade again. And then it got another extra boost. So I don't know what the short interest is here. And I don't know, there's a lot of volume trading, but man, if you got caught in this thing on the short side,
Mm,
you're holding some puts and
mm.
you're down at $7, which I know is over the expected move. I'm not saying you have to go all out bids here at 56.50, but holy mackerel. I mean, I don't know what else you could expect, on a down move like this. So not
Yeah.
shorting it down $7, not putting it in my portfolio long term or anything like that. But that's just kind of feel technical setup there in CVS.
All right, so now let's talk some. Let's go to AXP here. American Express, another earnings stock, came. The earnings for American Express came this morning. EPS of $3.49, beat by 20 cents. Revenue of $16.64 billion, which came in line with estimates. The guidance raises full year guidance from 1330 to 1380 to 1375 to 1405. But I guess beating on EPS, revenue in line, and raising guidance isn't enough for this market because the stock is trading down $8 this morning, about 2.8%. So, we know we've been seeing headlines left and right about credit cards are at all-time highs, and you'd think that'd be good for, American Express and these other companies, but I don't know why, but the market did not like this report this morning, or at least did not love it. Maybe expectations were just set a little bit too high, but the stock is trading slightly down on an otherwise pretty strong report.
I'll throw this one to you, Jeremy.
When I was looking at Visa, so Visa, I know it wasn't specifically earnings, but it had some of the DOJ stuff that Nancy Pelosi perfectly timed. And Visa had a big sell-off on September 24th, 25th, and just ends up bouncing and rallying hard. I'm going to take, Aaron, exactly what you said. Credit cards at all-time highs. A lot of people doing their borrowing right now. Interest rates, all the things. This is a good gap for, again, maybe a couple of days to expect a little bit of a drop. But ultimately, this gets bought up and the trend continues on American Express. I just think that with the state of what it is, the company of what it is, the trend of what it is, I think this is just a breath of fresh air, right? You had a really, really strong move the last 5 or 6 days, last 2 weeks, good push. It was one of those sell the peanuts while the circus is in town, and this was the circus, baby.
Okay. Oh boy, I'm just gonna go an old bag of tricks and say, hey, this 276, 277 area. That was an area of 3-4 highs in a row before it broke out, made a new all-time high. New all-time high yesterday and closing high. So I'll just go with the old resistance, new support trick here on AXP. Jeremy, I know we only have you here for a few minutes, and folks were asking, what's Jeremy looking at? So I know that, we talked about your 505 potential exit target. Is there anything that you've added, deleted, something that you've been stalking for medium or long-term positions? What is on the Jeremy Alexander Newsome radar?
Man, you guys are so cool. So I'll say this. I love that gap on ISRG. That stock is just a consistent performer. I feel like Lisa has it in her long-term portfolio. I bet she does. It's a really, really good gap. So that one has had 2 splits in the last decade. I think it probably has another one in 3 or 4 years. It's just going to keep performing. ISRG looks really, really bullish. I like that a lot. Coinbase, ticker symbol COIN, I'm quite bullish on because as Bitcoin will make a new all-time high before the end of the year, Coinbase will kind of continue to get that love, right? Coinbase and Robinhood will continue to get good pushes. Robinhood is a stock that benefits from all types of trading, but we're still pretty far away from its IPO open and definitely from its highs. So there's a lot of upside room on Robinhood. Both of those are kind of like that December, November plays, because I think November and December, right, with the holidays, people buy stocks for presents, people buy Bitcoin for presents, people buy gifts, and that all of that buying does eventually lead to some higher moves. So I think Robinhood goes higher. I think Coinbase goes higher. I think Bitcoin goes higher. And then, of course, Tesla.
I knew you were going to
Come
mention
on,
that.
Joel, dude.
Oh, wow, there we go.
Someone lost a bet, I'm sure. So Tesla at its 100 simple moving average down 19% from 260 down into the really strong level of 220. Earnings are next Wednesday. And I actually do think 60% likelihood that Tesla gaps down on earnings into 200. And then that's the lowest that we ever see ever again. Just my take. 40% chance that we gap up on earnings. We've had 8 bear days in a row, 5 very tight compressionary days. This is the perfect time for a strangle for anyone who knows anything about options on Tesla over earnings. Tesla will have a 7% gap up or down. But again, I think 60% likelihood down, 40% likelihood up. And then we start getting some really good squeezes on Tesla. And believe it or not, all right, last one for me, Joel.
Right. Well, no, I just want to. I know you followed Triple D on Twitter, and we were gonna take a break from. He has been. I mean, where are you on? Where's the revenue gonna come from? Is it the robots? Is it the robo taxi? What? Where's it? Where do you expect the big revenue boost to come from?
From this earnings or from future earnings?
Future,
their insurance company. So Tesla is going to be launching its insurance company as well for all vehicles that Tesla, that people drive in Tesla. You have all of their accident history, you have their driving records, you have who is at fault for the accident, faster claims, faster repairs, faster problems, faster fixes, and very, very rarely do Teslas actually crash, especially if they're in FSD, full self driving. The insurance company, Joel, is going to be huge. It's already out in 5 states, so that's coming. Semi-truck sales. Licensing for charging stations. I mean, future revenue is going to continue to grow. I'm very, very bullish on Tesla.
What don't you like? What do you say?
I don't, you know what? Hey, thank you. That's a great question. I do not like how these vehicles perform in really cold temperatures or really hot temperatures. I have a house in Vegas, and to drive a Tesla from Laguna Beach, California, which is where I live now, to Vegas is torture because I have to charge twice because the temperatures were, at least in the summer, 116 degrees in Vegas. Man, it kills Tesla's performance in really, really hot conditions or really cold conditions. So that's one thing that they have not figured out yet. And that's probably the biggest negative on Tesla.
And then what about stocks or sectors?
Boeing, man, I'm watching Boeing closely. If you're just looking at, I think this is one that's really, really nicely low. I don't think the stock is going to go away anytime soon. This is the American dream. Possible inverted head and shoulders coming up on the monthly chart, which you can see on the bottom right-hand side of that beautiful Joel Elconin screen. So Boeing right around this 150 mark. Earnings right around the corner. Keeping a very, very close eye on that one. And then sectors, what do I like about sectors? Anything robotics. So not specifically AI necessarily, but that's another reason why I do actually like ISRG is because they're doing a lot with robotics and surgeries, obviously. But ultimately, if you are working on any companies that are creating very useful cases for robotic implementation, we've seen Bicentennial Man with Robin Williams, and we all know that's the future.
So yeah, I can't get you to say there's anything you don't like.
Man, stock wise,
Yeah, stock sector.
AMC, GameStop, those are
Oh
garbage.
no! Oh no, Jeremy! Oh no! Don't open up
Yeah,
your
those are
Twitter.
absolute dumpster fires.
Okay.
Yeah, no,
Okay.
nothing right now. Nothing I'm ultimately super bearish on.
All right. Well, everyone knows Jeremy Alexander Newsome here. He's the founder of Real Life Trading. He's a world jiu-jitsu champion, also comedian, and just all around one of the most positive guys on Wall Street. Just positive attitude. So check out Real Life Trading, and we'll get you back on again real soon. We'll get you on with Triple D, and you guys could have a little Tesla rant.
Can't wait.
All right.
All
Thanks
right,
for getting
Jeremy.
up early. Thank you.
You guys
Yeah,
are the
Jeremy, it
best.
was nice to meet you, get on the show with you for the first time. Look forward to connecting more here in the near future. Thanks for getting up early and have a great rest of your day, man.
You got it, gentlemen. You rock.
All right, guys, that was Jeremy Alexander Newsome. All right, we've got Ivan Feinseth going to be joining us here in a few minutes here. We've still got some things to talk about. As always, if you got any stocks you want to look at, throw them in the chat or any news items. So, Joel, you've got the SPY pulled up. How we looking as we head into this open? You know, I know what you haven't said it yet today, but I think I know what you're going to say at some point.
The old Friday closing on the highs for the week move,
Yep,
or
you got it.
yeah. Yeah, kind of a little bit of a juicy open yesterday. Just going back a little revisionist history. Our average daily range has been around 60 handles. With that chip rally yesterday, you opened up basically with the 56 handle range. So that was a little bit too much. So you had to back it and fill. Today, it's just kind of a steady climb higher. Even though we've traded through it, the all-time closing high 59.0850. So that's one mild target on the upside. Like to see us close above that. And then on the upside, the actual print in the Globex, the high was 27 even, I believe, and no, 27 and a quarter. And your day high there was 25. So if you're looking for a target, if we could clear that 0850 area, really not much in between that and the all-time highs made early in yesterday's session.
All right. Well, speaking of all-time highs, let's talk some Apple here, which we flagged earlier this week on Monday as a stock that was kind of quietly creeping higher. Now it ain't so quiet, Joel, because you've got Apple, I believe, becoming the first $3.5 trillion company with this recent move up, and the stock is trading up another 2% in pre-market this morning. This is coming as we get some positive. And I'm not kidding here, but a positive headline from China, which we don't get a lot of those. But Apple's iPhone sales are reportedly up 20% in China from the previous model, and Apple again moving higher off this news. So, I mean, look, we hit what was that high we hit the other day, Joel? It was three. Hold on, let me find it. It was 237.49. We're now at 236.73. So we're about a buck off that all-time intraday high that we hit on Tuesday. So if you're watching Apple here again, I mean, like if this thing breaks out above that all-time high, it could keep going a little bit.
You made a good call on that the other day. We're talking about going back to the all-time high. And isn't it, all those people are talking about, wasn't it last week, a couple different companies like, oh, sales are going to be bad in China. And it's just kind of like, how do you know? And then they knocked the stock down. And I think that was the day that we had Ryan on. And he said, you know what? I love when they do this because it creates buying opportunities. And it did. I can't remember what it did last Friday, but it ended up, here you are, trading strong. Someone has an opinion at 237 here. And it's not me. But someone's just saying, hey, I want out. I'm parceling out of my position here. 237. I don't care about that all-time high at 237.49. Well poised to make an all-time closing high in this, but got to get rid of. There's a stubborn seller here. Just anyone that wants to buy the 237, they're saying sold to you. So just below the all-time high.
I mean, it's so interesting too with how much we talk about China and China being almost. I mean, it's interesting because obviously from a geopolitical standpoint, kind of an adversary, but at the end of the day, still our biggest business partner. And so many U.S. stocks are reliant on business in China. Whether you're talking about Apple, I mean, we saw what happened with Tesla when Tesla sales started slowing down in Apple. You see what happens to the oil market when demand comes in question. If China's economy is slowing and whatnot. So for as much as we like to talk about China as like one of our biggest adversaries, it's still so important for so many U.S. equities. And Apple is no different here. So you're seeing the China effect that when you do for the few times a year that it happens, when you do get a positive news out of headline out of China, that it does help. And you're seeing that with Apple this morning. Joel, do you own Apple in like long term or?
Boom. No, I don't. I think just indirectly, like through some S&P funds and things like that. But no, I don't think so directly. I'd have to check that. All right, Ivan's kicking around backstage here. I don't know if we're gonna have him on camera. I don't know if we can have him on audio.
Yeah, I'm gonna try to troubleshoot with him for like a minute, and if it doesn't work, then we'll bring him on, no camera, and
Okay.
And we'll discuss.
Okay. All right. Real quick here, I will just go to. I see BZ Tokyo. He's a long time contributor of the show, and I remember him talking about Rolls-Royce a long time ago. I think it might have been a buck or two or something. Yeah. Riding this thing up here, slow and steady. I thought they got a big contract for something. I mean, the daily looks.
The plane company.
Rolls-Royce.
The plane company.
They're building planes. Is that what their most recent thing they got? I thought the Rolls-Royce was the big cars.
I don't even know if they make the cars anymore. They do engines for planes, and they make tanks now as well. I think that's I think they got a defense contract. Yeah, I mean, I don't know. They make jet engines, tanks, and then I think they're still making cars a little bit. I don't know.
Yeah. I mean, there's just nothing here. I mean, if you're looking to get back to pre-COVID levels, 840 is the next level there. So slow and steady. Had to maybe get after this big move up. It had some consolidation. Maybe could consolidate around the 750 area and push another leg higher.
Yeah, so Rolls-Royce, I mean, if back in my day, Joel, it was a car company. Now they do nuclear energy, planes, tanks. I don't know what Rolls-Royce doesn't do, but I mean, we don't talk a lot about some of these stocks that are trading the 5 ticker stocks that are trading, OTC or ADRs or whatever it is when they're an international company. But all right. We might as well just stop the show now because we're not going to get to see Ivan's face. We're not going to get to see him on camera, but that's okay. We'll still bring him on and see what Ivan Feinseth from Tigress is watching here. Let's go ahead and give him our pre-market prep special guest intro and bring Ivan on.
All right. Good morning. We have Ivan Feinseth here from Tigress Financial Partners, one of our favorite bulls that comes on the show. Ivan, how you doing today?
I am doing good. I am glad to be on. Sorry, I'm having some camera issues.
That's okay. That's okay. Well, just overall top-down view of the market here, trading right near all-time highs.
A lot of times where the market's been down, and you say I'm always bullish, and now we are at new all-time highs, and I think that this is going to continue. I think the S&P breaks easily through 6,000 before the end of the year, and marking another strong year for the stock market. And I think the momentum is going to continue. We got strong corporate results. We got the Fed on the side of the bulls. So we got the AI trade, which is not a fad, not a bubble. It is a powerful, economic, technological, and stock market driving force that is spreading out to other areas, including power generation. In fact, I was looking last time I was on was mid-August, and I spoke about a company that makes small modular nuclear reactors called Oklo. The stock was just around $6 at the time. It hit 16 the other day. And we see that all of the big hyperscalers and cloud service providers like Microsoft and Google and Amazon are investing in nuclear power. In fact, last week they announced they're going to restart 3 Mile Island. I think we should have been all nuclear 25 years ago, and sadly the 3 Mile Island issue kind of put the kibosh on the wanting to advance nuclear power in the 80s, and we never really focused on nuclear power. Now it is being viewed as a clean and renewable source of power that is going to be needed for all of these data centers, which we all hear about the need for a massive amount of electricity, as well as electricity for the grid to charge the upcoming fleets of EVs that are going to dominate auto sales over the next 10 years as we transfer to everybody driving an electric vehicle.
Ivan, I mean, we've talked a lot about Oklo the past couple of weeks. I mean, it's made an incredible move in the whole, nuclear energy sector as a whole. And I'm with you on nuclear long term. I mean, I think it's silly we haven't been investing in this for a while. And I think that's, we're going to see that come in the future. But for me right now, I'm looking at Oklo, I'm looking at some of these other names, and you're reading about it. And it's like, yeah, this site is going to be live in 2030. And then we're going to hope to have another site by 2035. I mean, is there a scenario where
Oklo is going to start to be online, starting in 2027, 2028.
Okay, so but my point is that like a lot of these things are still further down the road.
Yeah.
Like we see some of these stocks pull back in valuation before then, and then we'll see them come back once the that's what I'm worried about, is buying these stocks right now just to be too early, essentially.
That is the issue. No, you're right about that. This is an early on trade, but look, NVIDIA, 8 years ago was an early on AI trade, and NVIDIA's had a lot of ups and downs, and now it has a lot of ups, and it's got further to go. I mean, my price target on NVIDIA is 170, so it's got, I think, a lot more upside. NVIDIA hit a rough patch when they out there were talking about delays in production of the Blackwell processor. It's in production. It's not delayed. It will start shipping at the end of the year and ramp up production next year. It's just crazy how some of this commentary and some of these predictions just are so off base, but get so much focus that it shakes things up. But and then they're already working on the on the Vera Rubin processor for next year.
Yeah, no, I think the NVIDIA comparison is good because, like you said, if you invested in NVIDIA 8 years ago and held the whole time, you're super happy right now. But there were times in that 8 years where the NVIDIA drew down, 50+%. Yeah. I mean, the whole
that is the game. It's all, it's sadly the part of it, but nothing goes straight up. But even look at Apple right now, which is about to break out to new all-time highs. That you had one analyst at some firm not only calling for slow sales in the iPhone 16, but slow sales in the iPhone 17.
Ivan, what could go wrong? What possibly could go wrong?
Yes. Well, we have two overhanging issues of uncertainty. We've got geopolitical risk, that the situation between Israel and Iran, and it's just great how Israel is really measured and taking their time in moving forward to eliminate the threat that Iran is placing. It exposes Israel too. The exploding pagers were just incredible. But so geopolitical risk, that we are drawn into a conflict. The U.S. and Israel is drawn into a direct conflict with Iran. And then the situation with Russia and Ukraine, and at some point the fear that Russia will amp up their aggression against Ukraine. And then the election holds a lot of uncertainty. I think that the market is predicting a Trump win, It's crazy how close in a lot of the polling that it shows the race to be. But I think the market is looking at a Trump win and would be disappointed, I think, with a Harris win.
All right, Ivan, I've got a question just on the overall market here, because I think, you and I are aligned where we're usually both pretty bullish. And I think, pullbacks in the overall market are buying opportunities. But a lot of people, I've been hearing a lot of people recently say, like, oh, we can't just go up, all the time, the whole time. We need a pullback. We need a correction. Is that true? Why do we need it? Why would we need a correction? I mean, because you go back
mathematically. All right. Well, we know that eventually the market tends to always overdo whatever it does, whether it's on the upside or the downside. But first, I mean, the market doesn't necessarily have to correct in price. It can correct in time, meaning that, the market could go up and hold a certain level and stay there for, multiple months and just go sideways, and then in theory, so the market moves up in anticipation of the economy getting better or getting worse. And by the way, people ask me all about the Dow and the S&P 500. You know that the S&P 500 is a stock market index. It's representative of the stock market. The Dow is not. The Dow is an average that was created to measure expectations in the economy. So the Dow is more of an economic index. So the companies that are selected in the Dow are selected on a process basis from the beginning by Dow and Jones to be representative of the economy, where the S&P 500 is representative of the stock market. And that's the stock market is a 6 months leading indicator for the economy, especially with the Dow. So the Dow is saying that we are going to continue with a moderately strong economy. I mean, that in theory, we never had this recession that the bond market has been predicting for 4 years. The yield curve has been inverted for 4 years, and in theory, predicting a recession that hasn't come. But that they say the inverted yield curve has predicted 50 of the last 5 recessions. Mm-hmm. So that's not necessarily accurate. But the Dow, as a predictor of the economy, tends to be accurate, and it looks like the Fed has engineered a soft landing. Whether you want to debate about the process, Powell waited too long to raise rates and now maybe waited too long to cut rates. He should have cut in July instead of waiting for September, and then gave the 50 basis point rate cut in September. But the economic data continues to be moderately positive. I think we'll get 2 more 25 basis point rate cuts, but they will move slowly. I was surprised about the 50 basis point rate cut because Powell has said he usually wants to transmit way ahead of time what the Fed will do. He doesn't want the Fed to be surprised, to surprise the market. But
all right, Ivan, before we go, I just want to ask you about a couple of your most recent price target raises here. First, let's go to Costco. Do have some Costco from a long time ago. Major consolidation here after earnings. You bumped your price target up to 1,065 here. Tell us the catalyst to get there.
Well, you got really several. They have just the 3 things I think retailers need for success is 1, a unique shopping experience. They have it. By the way, they have a very loyal customer base that pays for the opportunity to shop there. And they have this, not only the value-based proposition, which is important, but this treasure hunt shopping experience. 2, they connect with their customers well between, merchandising, promotion, couponing, or like the circulars that are co-op advertising and promoted with companies that sell products in the store. And they're expanding their e-commerce and fulfillment capabilities. But if you notice that they, like another interesting retailer, TJ Maxx and Costco somewhat benefit from not having a strong online presence because they want people in the store because of the treasure hunt shopping experience. And the more time you spend in the store, the more you tend to buy. And Costco does have a lot of impulse promotional items. So, and it's their efficient operation, their supply chain, their ability to drive costs down, their ability to also connect with a broad range of consumers, from value conscious to more wealthier consumers who shop there, is all going to continue to drive the stock higher, to drive their, also two more things: international expansion and just overall global store expansion.
All right, one more. They're going to have a hard time explaining this one. The Cisco Kid, you raised your price target to $78. Talk to us about the catalyst for Cisco to get back. I don't even know if that's all-time highs, because I know back during the financial
I
crash, it
think
was
it was
back.
higher.
Talk to us about Cisco.
Well, you need three things for a data center. You need the processing power, you need power, and you need connectivity. And Cisco is part of the connectivity part of the data center. And more, whereas you have, the concept of the cloud is you're connecting from a thin client or, local device to a remote cloud, which then you have the latency of the connectivity. You're going to move to more real time with edge computing, where the computer power is pushed to the edge where the device is, instead of the device connecting to the cloud where the data and processing power is. And this is part of this along with AT&T and Verizon, which is why Verizon and AT&T are buying spectrum and expanding their fiber and their wireless and wireline networks. It is all about high-speed connectivity, which is what Cisco pioneered back in the day when we first started to get into network-driven computing. So this network-driven computing is going to reemerge as a powerful theme within the data center AI theme.
Ivan Feinseth, Chief Strategist, Tigress Financial Intelligence, CIO, Tigress Financial Partners, maintaining his bullish stance here on the markets. Ivan, always great information from you. Get that camera working so we can see that handsome mug next time, and we'll be dialing you up again real soon. Thank you,
All right,
Ivan.
great to be on. Have a great weekend.
All right, guys, that was Ivan Feinseth from Tigress Financial. Always great to catch up with Ivan, get his outlook on the market. All right, guys, we've got about 7 minutes left here. Joel, you want to talk some Intel?
Yeah, not really going anywhere, but you could give the news.
So Intel is said to be looking for minority partners in programmable chip unit. Intel reportedly considers selling minority stake in Altera unit for $17 billion amid market challenges, losing ground to NVIDIA and AMD as stock plummets over 50% this year. That is the headline that I got here in Pro. Obviously, Intel did not participate really with the rest of the chips yesterday that moved higher on TSM's earnings report. So I don't know. I mean, is the story dead here in Intel, Joel?
Well, from the chart, until you can get back over this 2466 area and get in to fill the gap, yes. Don't know much about what they're trying to sell a stake in. Doesn't seem to do anything right over there. You did. I just note that you didn't make a high right back in September over $24, and you've seemed to have a long consolidation here at 22. So, if you think that this is a meaningful move off the low, I think you can lean on this 21.80, $22 area. And best case scenario, you get back above 24. The high since making that multi-year low was 24.66.
All right, and then let's see. Someone in the chat was talking about something else. No, all right. I did want to talk about. I guess I was going to bring up Dell too, because Dell's been perking up, and I mean we saw Dell go on a crazy run, get up to around 180, then got crushed all the way down to around $90, and has since come back all the way up to 130. Joel, so I wanted to get your technical read on Dell real quick while we were talking about Intel.
Just going with the market, right? Just caught a nice bid here. Longer term, I mean, you did have that crazy move. So if you're looking for a target, not back at all-time highs with the market, just because that was just an extraordinary move. Dell, boom, boom. You know what? You're coming up to an interesting area. This 133.50, 134, that's about halfway back. Fills a little bit of a gap here at 132.39. So a big area, just moseying its way up there. But, if your target was halfway back, you're getting right there. As always, you like to see the gap fill, little bit of consolidation, and then form support. But it hasn't been a straight up line, but nice appreciation in Dell getting back half of that June to August swoon.
All right. And then we did have some analyst ratings, at least one of note this morning. A lot of the other analyst ratings were just coming in on the stocks that reported earnings. So you had some on Netflix, etc. But Bank of America coming out and giving NVIDIA a new price target, raises the price target to $190 a share, which is about a 40% upside premium from where shares are currently traded at below $140. So Bank of America, just the latest of the many, many banks and firms that have come out with a super bullish rating on NVIDIA.
All right, last two times it got up here, it had a little problems. Made that all-time high yesterday at 140.89. The previous high was right there at 140.76. So someone, perhaps targeting that whole 141 area as a potential target. The way the market's trading right now, if you want to come down to support, I'd say the mark. Anyone that took that home short at 136.93. Would like to see the mark. Before we go, and I'm sure if you have anything else, Aaron, I just wanted to address a comment in the chat here, and I believe it was from Elon, and he just any thoughts on the last few days, open high, close lower after reaching. It's just it hasn't been much of a week here, and earlier in the week I talked about the low volume rally, a really tight range this week. One of the tightest. We haven't even had an 80-point range for the entire week. So you could look at it as that maybe the buyers are running out of running out of ammo up here at all time highs, or you could just look. The trend's been higher. You have a consolidation. You're consolidating up near all time highs. Let's keep earnings season as it's going and break out. But right now, the Bulls put in a triple bottom from last Friday at 58.50 and went 58.53 and a quarter on Wednesday, and you never got to look back at it. So Bulls are still in firm control. And let's just for today, let's not be too greedy. Let's just post a new all-time closing high in the S&P, and that would be above 59.08 and a quarter.
All right, there you go. Well, the only other thing I had, and I'll do this in 30 seconds because I know we're wrapping right at 9 a.m. this morning. This was a headline. I'm always surprised when the government does something that's actually useful for us, actually good for consumers. And this was a headline we got yesterday. So canceling subscriptions has to be as easy as signing up, the FT says in a new rule. So this is a click to cancel rule. Any subscription you have, whether it be Netflix, a gym subscription, etc., from now on will be as easy to cancel just with one click on a website. And the reason we're talking about it here is I can't imagine this is great news for, a Planet Fitness or some of these other stocks that have hard to cancel memberships. I know I have a gym membership that I've been trying to cancel for like a year and I haven't done it. And now that they changed this rule, I finally will. So if you guys got any other stocks, companies, subscriptions that you're in the chat, let me know, because I'm curious what other stocks outside of Planet Fitness might this be bad news for. I mean, you could throw Netflix in there potentially, but, I think Planet Fitness will be one to watch.
All right, that got hit 2 days ago and then a little follow through yesterday. Long consolidation period. Important area for Planet Fitness. Last month's low 78.37. This month's low 78.16. You know what happens when you take out monthly lows? You go to the next monthly low, and that's a ways away. So very, regardless of the news on that, very important for that to hold. Just real quick, we just made a note. We talked about CVS. Looks like it is getting off the mat here. Just a little bit, moving off those moving up strongly off the pre-market lows. AB, great job again today. Excellent job the last 3 days. We'll be back full scale on Monday with Eric Kroll.
Eric
Talk about,
Kroll,
yeah,
IPOs.
we're going to dust off the IPOs, see how they did, see if there's anything in the pipeline. But folks, have a great day. Have a safe weekend. Back with you Monday morning.